Let's bring in Wolfe Research Managing Director Stephen Chubak along with Mike Santoli. Stephen, your reaction to this news from Wells Fargo, a 5-cent increase in the dividend here, but leaving share buybacks unchanged. Is this what you expected?
Yeah, it's very consistent with what we had expected. And I think you're going to get a lot of updates on dividends, but you're going to have relatively vague commentary or guidance around buybacks. And it goes back to what Leslie was alluding to. Basel III Endgame is going to be the most significant change in terms of regulatory capital requirements that we've seen in close to a decade plus. And given how significant those changes are going to be, I think the expectation is that the banks need to be conservative, need to be measured with their buyback commentary. We're expected to get that proposal in a matter of weeks. So then the banks can reassess and determine how much incremental capital are we going to need, if it's a curtail buybacks or the inverse.
Okay. I think we're having some technical difficulties there. Mike, I want to get your thoughts on what we've seen with some of the bank stocks, because we had a sizable rally in many of these names, given the news of the stress test this week.
Yeah, it was a bit of reassurance, Morgan, that the capital cushions are sufficient, that there is dry powder that they may have to continue to allow to pile up as they continue to go through this period where they want to show some conservatism. On one level, it's unfortunate for investors that they can't or won't be more aggressive on share buybacks in the sense because their valuations have come down quite a bit. A lot of these banks are trading below stated book value, so therefore, if you buy back the stock at those prices, it tends to be pretty good for earnings going forward. On the other hand, there's the reassurance that they theoretically have the financial capacity to do it and are not in bad shape. Meanwhile, investors kind of fixating on other elements of the story, such as how much more they're going to have to pay for deposits as money market yields go up. And it seems like a little bit of a general drag on profitability, but nothing to be particularly worried about in the very near term.
Okay. Gentlemen, stay with me. We're going back to Leslie Picker because we're getting more announcements. Hi, Leslie.
Hey, Morgan. Yes, Morgan Stanley announcing a 7.5-cent dividend increase, going to 85 cents per share from the current 78 cents per share or so. Also authorizing a renewed $20 billion repurchase program as part of the stress test that took place earlier this week. They felt confident to be able to hike the dividend as well as reauthorize that $20 billion repurchase program. Also got the announcement from JP Morgan as well. They intend to increase their quarterly common stock dividend to $1.05 per share. That's up from about $1 per share for the third quarter of 2023. They continue to authorize to repurchase common shares under the existing program that they have that was previously approved by the board of directors. So you've got a decent hike from both of them, Morgan Stanley and JP Morgan, and Morgan Stanley renewing its $20 billion repurchase program, Morgan.
Okay, Leslie, thank you. We know you're going to continue to monitor here. Stephen, I want to go back to you on the two Morgans. Your thoughts, especially as we see Morgan Stanley move up about 1% right now in after-hours trading.
Yeah, I think the commitment to the buyback is being viewed constructively, given some of the uncertainty that I talked about. So not surprising to see Morgan Stanley get a little bit of a bump, but it's going to be modest simply because we still have to wait and see how this proposal ultimately shakes out. And I do think the general expectation is that Morgan Stanley, as well as the other systemically important banks, are going to be disproportionately impacted by Basel III Endgame. And so given that expectation, I think near-term buybacks will be tempered, even in the context of some pretty large headline authorization numbers. But the banks still have to be very much in wait-and-see mode, and that's going to temper the buyback, at least for the time being.